Tesla has been caught in a fierce headwind in recent months, particularly due to the new tariffs imposed by the Trump administration, the political turmoil stirred by Elon Musk in Europe, and a massive decline in the company's stock. These factors are deeply shaking Tesla's once untouchable image. The company, which once stood out as a brand that took the industry by storm and was considered the unrivaled leader of the electric vehicle market, is now experiencing serious setbacks both in the financial market and in European sales charts. Tesla shares have suffered a near-historic decline in recent weeks, driven by global turmoil that began with Trump's trade tariffs and Elon Musk's political moves in Europe. While the company faced a new wave of selling on Wall Street, with the United States Secretary of Commerce warning that Tesla stock is dangerous, the company also suffered an unexpected blow from the Musk effect and increased competition in the European market. Especially in Germany, Tesla sales declined by nearly 70% in January and February. The rapid decline in market share in France and other European Union countries further deepens the company's stock market collapse. There are many factors behind these developments. United States trade moves, Musk's high-profile political statements, a car market struggling with price cuts, and European consumers distancing themselves from Tesla are all contributing. The company's shares have been on a sharp downward trajectory since the beginning of the year. Some say it's the result of a hollow panic, while others say it's a persistent structural problem. It seems it cannot be explained by a single factor. Competition from both China and Europe, a tough economic environment with rising raw material costs, and Musk's political backlash have all combined to weaken Tesla's image and economic power. Even the United States Secretary of Commerce's comments about buying Tesla shares had the opposite effect on the market, with the company's shares falling even further after the announcement. Investors question the strangeness of the official hand's involvement, and instead of restoring confidence in Tesla, it had the effect of shaking it. The numbers sound the alarm: a 53% collapse, 7% losses in one day. Tesla shares have plummeted nearly 53% since the beginning of the year, shocking shareholders, according to Bloomberg data. This collapse, which accelerated especially in mid-March, saw a loss of up to 7% in value in one day at the close of March 14. The market value of the stock decreased from $770 billion United States dollars to $635 billion United States dollars, with a monthly decline of nearly 20%. Royal Bank of Canada lowered Tesla's target price from $220 United States dollars to $175 United States dollars, saying they are concerned about competition in China and Europe and Musk's Twitter-focused agenda, renewing investors' fears. Elon Musk has long been at the center of political debate. The trade minister's insinuation that we see Elon Musk and Tesla as risky was salt and pepper for Tesla investors. Upon these words of the minister, Tesla shares immediately fell by 6%. This decline was also blended with the tariffs brought by the trade war between the United States and China. While Trump's imposition of additional taxes on Europe, Canada, and China with the slogan "We will protect American production" increases Tesla's supply costs in these country markets, retaliatory tariffs also lead to an increase in the company's non-United States sales. Therefore, Tesla, which has suffered from Trump's tariffs both on the production and sales side, is also struggling with the uncertainty caused by Musk's political polemics. The most worrying picture for the company is in Europe. Electrek announced that Tesla's electric vehicle sales in Germany in January fell by 70% compared to the same period last year. This means that in Europe's largest automotive market like Germany, Tesla has lost a large market share in a short period of time. Model 3 and Model Y deliveries are well below expectations, the French and Italian press reported. According to Euronews, Elon Musk's political stance and his polemics on Twitter are creating a negative image among consumers in Europe who have a perception of environmental and social responsibility. CBS News even suggests that the decline in Europe is going in the opposite direction of the EV trend, meaning that while other electric vehicle brands are growing, Tesla is declining. Investors are no longer just nervous about Musk's political outbursts. They are also concerned about the company's lack of clarity on its long-term strategy. The United States Secretary of Commerce's statement that Elon Musk intertwines his political moves with Tesla, which poses a great risk to the stock, was the last straw. Tesla's corporate governance needs to be clearer. Musk's personal decisions are overshadowing the company, the minister said, according to Axios. These words were perceived as an official warning and accelerated the wave of sales against Tesla on Wall Street. This is the period between March 14 and 16 when $70 billion in market capitalization was wiped out. Figures showing how bad things have gotten in Europe confirm Tesla's sales declines in some major countries. The decline in the German market, reportedly as much as 70%, is hitting the company's performance on a European scale hard. This suggests that Tesla's once rapidly expanding, irresistible growth story may no longer be valid. In the electric vehicle market, a strong push by Volkswagen, Renault, Stellantis, Hyundai, Kia, and others already presented a challenging backdrop for Tesla. Musk's statements that offended some European leaders, his clashes with politically divergent views, or his controversial posts on social media all seem to have mobilized consumer sentiment. Many European customers may have begun to move away from Tesla, citing less sympathy for Elon Musk. The Trump tariffs are an additional blow. America's protectionist moves often have unpleasant consequences for Tesla. The company was already aiming to remain competitive on a global scale by integrating its production and sales networks in China and Europe. But increased logistics costs with the new tariffs and additional customs costs in the European market could strain Tesla's profit margins. The tendency of European commissions and some governments to protect local producers also puts Tesla at a disadvantage under these circumstances. The company, which feels the competition even more severely at a time when its brand perception is damaged, continues to lose value rapidly in the financial markets. Not only the reaction of the public in Europe to Musk, but also the moves of Chinese brands to enter the European market are squeezing Tesla. Business Insider emphasizes that the 53% collapse in Tesla's global sales has been accelerated by the European foray of companies like BYD and NIO. While BYD plans aggressive entry into EV-friendly countries like Germany and Norway, Tesla's factory investments and model updates seem to have slowed down. Especially in Germany, the price advantage of European and Asian manufacturers benefiting from local incentives and Musk's spread-over-time strategy are turning the competition against Tesla. The decline in share value has also been the subject of comments such as the price was overinflated, now it is coming down to its real value. For years, Tesla's shares have been priced on future growth potential rather than the company's actual profits. As rival brands enter the electric vehicle scene, multiplying their production capacities and increasing their market shares, Tesla's position as the sole innovative leader is being challenged. The market contraction or loss in Europe reveals precisely this competitive reality. Production disruptions during the pandemic, problems in chip and battery supply, and rising raw material costs can make Tesla's relatively high-priced models lose their appeal. Meanwhile, Musk's exaggerated statements, political disagreements, and even spats with European leaders only add salt to the fire. Some internal news also raises questions about the management team and corporate structure. Many senior executives have either retired or moved to different companies. Elon Musk's excessive interest in Twitter strengthens the allegations that he does not devote enough time to the main company, Tesla. Especially in the Berlin Gigafactory in Europe, there are rumors that Tesla is falling behind production targets, labor problems, and difficulties with local regulations. Musk's occasional polemics with the European Union institutions on social media cause Tesla to alienate politicians and regulators in this continent. Therefore, the phrase "a hard blow from Europe" is felt not only in sales, but also at the level of politics and institutions. Investors are keeping an eye on Tesla's delivery and revenue statements for the next quarter. If the downturn in Europe continues, the company's global sales targets may not be met. It is also possible that Tesla will redirect its remaining production capacity to Asia or other markets. But China is also in trouble due to rising competitors. All these turbulences cause Tesla shares to question: is the bubble bursting? The shares, whose valuation was blown up by saying it is a technology company, not an automotive company for a while, are now the subject of facing the real reality comments. In addition, the United States Secretary of Commerce's statement is publicly criticized as an intervention in the dynamics of the market itself. Some analysts note that such advice from government officials can have the opposite effect, even though it sends the message that investors should not panic. When all these factors come together, it can be said that Tesla is facing the most severe downturn in its history. The brand has been through turbulence before, but each time it has risen again with Musk's vision and innovations. But now multidimensional stresses such as competition, political tensions, the high interest rate environment, and Elon Musk's European policies are compounding, leading to the question, is the story breaking? If the company can turn things around with a series of strategic maneuvers, the picture could turn around. For example, putting new battery technology into mass production, offering models such as the Cybertruck at full capacity, and perhaps repairing brand reputation by curbing Musk's social media outbursts. For now, however, the market is in a challenging period. The most striking aspect of the decline in Europe is the decline in Tesla sales, despite the growth of the electric vehicle market. This suggests that consumers prefer other brands. While many attribute this to Musk's political statements, others say the issue is related to practical factors such as price and service network for car buyers in a key market like Germany. Tesla may have fallen into the perception of being expensive and poorly serviced. In other countries, the new European brands coming on board approach may leave Tesla alone in the competitive landscape. The company recently tried some price cuts in Europe, but this step did not bring a positive reaction in the stock market as it pulled down profitability. After all, Elon Musk's charisma was able to lift the company up when Tesla, like its namesake, was leading or breaking big electric storms. Now, factors such as tariffs and political outbursts are creating headwinds. Musk's poor rapport with European leaders also resonates on the consumer front. Trump's imposed or planned tariff measures are narrowing the export gates for Tesla. All this is rapidly driving down the company's value on the stock exchange. Some analysts predict a further decline, saying the 53% collapse may continue. Others predict there is panic in the short term, then we can see a recovery. Sales data and financial results to be announced in the coming months will show more clearly how much Tesla will be affected by this turmoil. If sales in Europe continue to remain lower than expected, analysts may react more harshly, triggering an additional wave of sales in the stock. If the Chinese market suffers similarly, Tesla would take a worldwide hit. Since the company is a brand that stays on the scene with innovative breakthroughs, a possible technology and product surprise could change the balance again. For now, however, the landscape opens the door to the question, is Tesla's golden age behind us? Elon Musk has been through tough times before and managed to bring the company back to record profitability. This time, the abundance and diversity of factors make his job a little more difficult. Trump's tariffs, loss of customers in Europe, aggressive strategies of rival brands, rising domestic electric vehicle brands in China, and global economic woes are all targeting Tesla at the same time. On the one hand, Musk's social media outbursts and bizarre investment advice from United States government officials about the company are creating a chaotic atmosphere. If Tesla does not intervene wisely, image and sales losses may continue, and new lows may be seen in the stock. Another detail that has attracted attention recently is that short-term speculators have stepped in with the loss of confidence in Tesla shares. Some fund managers are short-selling or shorting to take advantage of the Tesla volatility. High volatility also spooks institutional investors. For a while, Tesla was seen as a symbol of long-term growth. Now that this confidence has been shaken, institutions are selling shares while those who say wait and see have increased. If the company announces strong results again, the momentum may return. Otherwise, the sale of large funds may deepen. The whole picture shows that Tesla has been severely hit by Trump tariffs and Elon Musk's approach to European politics. The company's stock market slump and declining sales figures in Europe raise the question of whether its best days are behind it. All the data shows that the 50 to 53% drop in Tesla's shares is not only due to the United States or China, but bad news from the European market has also triggered the collapse in the stock. Factors such as a 70% drop in German sales, losses in the French market, the cooling of European consumers to Musk, and the general economic recession are overlapping. The 53% year-to-date drop has wiped hundreds of billions of United States dollars off Tesla's market capitalization. Giant institutions like Royal Bank of Canada and Morgan Stanley are downgrading the stock, and the United States Secretary of Commerce is saying stay away from this stock. Trump's tariffs have also made Tesla's supply chain and global logistics more expensive. Tesla will have an uphill battle in the short term. How it regains lost buyers in Europe, how it adapts to the trade war between China and the United States, and how it manages Musk's political rhetoric will determine whether the company can get back on the upswing. What do you think? Will Tesla emerge from this turmoil stronger, or will it be known as a giant falling from the top? Share your comments with us, subscribe to the channel, and do not forget to hit the like button.